What these changes mean for your monthly Social Security check. You know what nobody tells you about retirement? The very system you paid into for 40, maybe 50 years can change the rules on you overnight. Right now in 2025, something significant is happening with Social Security that's going to affect your monthly check. I'm not talking about the standard cost of living adjustment we see every year. I'm talking about structural changes the Social Security Administration has been quietly implementing. If you don't understand what's happening, you could be leaving money on the table that you've already earned. Here's the reality. Social Security isn't just some government handout, you paid into this system with every paycheck. That money was supposed to be there for you when you needed it most. But with trust fund projections, benefit calculations, and Medicare premium adjustments all shifting at once, most seniors are walking around in the dark about what they're actually entitled to receive. The SSA has announced benefit increases, but the devil's in the details. What does this actually mean for your specific situation? What's the real number that will hit your bank account? And more importantly, are you positioned to maximize every dollar you deserve? Look, I've been doing this for a long time, and I can tell you with certainty that most people have no idea how Social Security actually works. They think it's simple: you turn 62 or wait until 67, you file some paperwork, and boom, you start getting checks. That's like saying you understand how a car works because you know how to turn the key. There's an entire engine under the hood, and right now that engine is running differently than it has in years past. The SSA announced changes that will impact millions of seniors, and I'm going to walk you through exactly what this means in plain English. First, the SSA announced a cost of living adjustment, COLA, for 2025. Yes, benefits are going up, but everyone's talking only about the percentage increase, as if that's the whole story. It's not. The COLA for 2025 is 2.5%. If you're receiving the average Social Security benefit of around $1,875 per month, that's roughly a $45 increase. In an economy where eggs cost $6 a dozen and property taxes keep rising, $45 doesn't feel like much. But there's more to the story than that percentage. Social Security benefits aren't just adjusted for inflation. Multiple factors determine what actually lands in your bank account each month. Your primary insurance amount, the benefit at full retirement age, early retirement reductions if you claim before full retirement age, delayed retirement credits if you wait past full retirement age, spousal and survivor benefits, and Medicare Part B premiums deducted from your check. It's a puzzle where someone keeps changing the pieces. About Medicare Part B premiums, details matter. The Part B premium moved from $174.70 in 2024 to $185 in 2025, an increase of about $10.30 per month. That reduces the net effect of the COLA. If you get a $45 COLA increase but pay an extra $10 in Medicare premiums, your real increase is about $35 per month, or $420 per year. Not life-changing for most, but every dollar counts. Social Security was designed to replace roughly 40% of pre-retirement income. That means living on Social Security alone will likely require a substantially reduced lifestyle. This is why you need retirement savings outside Social Security, a 401k, IRA, or other investments you control. Those resources protect you from policy shifts and political decisions in Washington. If you're still working while collecting Social Security and haven't reached full retirement age, be aware of earnings limits for 2025. If you're under full retirement age for the entire year, you can earn up to $23,400 before Social Security begins reducing your benefits, $1 withheld for every $2 earned above the limit. If you reach full retirement age during 2025, the limit rises to $62,160, with $1 withheld for every $3 over the limit, until you reach full retirement age, after which there is no earnings limit and you can earn any amount without reduction. Taxation is another hidden cost. Up to 85% of your Social Security benefits can be taxable depending on your combined income, AGI plus non-taxable interest plus half of Social Security. For individuals, combined income between $25,000 and $34,000 can make up to 50% of benefits taxable, Above $34,000, up to 85% may be taxable. For married couples filing jointly, the thresholds are $32,000 and $44,000. Coordinating withdrawals from traditional IRAs or 401ks with benefit claims is critical to avoid unnecessarily increasing taxable income. Roth conversions can help because Roth distributions don't count toward the combined income calculation. Regarding long-term solvency, projections show the Social Security Trust Fund could be depleted around 2034 or 2035. That would not end Social Security, but without reforms it could reduce scheduled benefits to roughly what payroll tax revenues can cover, about 80% of scheduled benefits. Congress will likely act with phased changes and exemptions for current retirees, because cutting current beneficiaries is political suicide. Still, plan for a future in which Social Security provides less than you expect. Practical service changes matter too. The SSA is moving many services online while local offices remain understaffed. Phone wait times are long. If you need to apply, report changes, or appeal decisions, be persistent, call repeatedly and visit your local office if necessary. This is your money, don't give up. Survivor benefits are an area where people commonly lose significant sums through ignorance. If a spouse passes and was receiving or eligible for Social Security, a survivor benefit may be available and often requires strategic claiming to maximize lifetime payouts. Consult a specialist before filing. The bottom line, the 2025 changes are real and will affect monthly income. For most, you'll see a modest COLA partially offset by Medicare premium changes and tax rules. Your purchasing power may barely move when measured against real costs. Don't be passive about retirement planning. Understand your entitlements, plan when to claim, coordinate with other income sources, and build savings outside Social Security. You earned this money. Learn the rules, plan strategically, and don't rely solely on Social Security to fund your golden years.